All right, everyone, get ready because we are jumping right into a topic that I know is on a lot of people's minds right now. The 2024 U.S. presidential election. It's really close between Kamala Harris and Donald Trump. It's so close it feels like every vote really counts. And we are not just here to watch as this plays out. We are here to really dig into what a Harris or Trump win would mean for India. We have some great research from Philip Capital we're going to be looking at today. And I have to say, it's full of potential outcomes that I hadn't even considered. We might see some big shakeups in IT, some unexpected changes in the auto industry, and maybe even some big moves in the energy sector that could completely change the game.
That's right. We are going to go way beyond what we hear in those catchy campaign slogans and really break down what a Harris or Trump victory would actually mean for India. I mean, their policies on the economy, trade, and energy are so different. And those differences could have huge consequences, not just in the U.S., but around the world.
So how can India get ready right now, not just to survive, but to really succeed in a post-2024 world, no matter who wins?
Yeah, that's what we're going to try to figure out today. And to do that, we need to start with a quick overview of how the U.S. election actually works. Because, let's face it, it's pretty complicated.
Yeah, it's definitely not just a popularity contest.
Mm-hmm.
So remind us how this whole electoral college thing works. And why do some states suddenly become more important than others every 4 years?
You're talking about those swing states, right? Yeah, those are the ones that can really make or break an election. It's like this. Each state gets a certain number of votes in the electoral college, based on how many people live there. To be president, a candidate has to win a majority of those electoral votes, not just the popular vote.
Got it. So that's where those swing states are so important. They're the ones that could swing the election one way or the other.
Exactly. Right now, we've got 7 key swing states: Arizona, Georgia, Michigan, Nevada, North Carolina, Pennsylvania, and Wisconsin. And based on the most recent exit polls, the race is super tight in a lot of those states, which is why it's still anyone's game.
Yeah, it's a real nail-biter. Okay, so we've got the Electoral College, we've got the swing states. Now let's get down to business. What are Harris and Trump actually promising? And how could those promises actually affect India?
Okay, well, let's start with the economy and taxes, because that's where we see some big differences. The Democrats, with Harris, they're focusing on things like reducing food costs and helping people buy homes. But they also want to raise taxes on corporations, which might not be popular with some businesses. And they want to keep the Federal Reserve independent.
Okay, and what about the Republicans with Trump back in charge?
They're sticking to their usual plan: lower taxes for corporations and a big focus on bringing down inflation. But there's one new thing this time. Trump has been hinting that he might challenge the Federal Reserve's independence. He's even suggested that he might replace the current Fed chair.
Wait, he wants to change things up at the Fed? Didn't he say something like that during his first term? What happened to the markets back then?
Yeah, it definitely created some uncertainty, and it could happen again this time. Philip Capital has actually done some interesting modeling on this.
Yeah.
And they think if Trump actually does this, it could affect Indian markets. It could even impact the value of the rupee. They haven't given us specific numbers yet, but their analysts are saying this is something to keep a close eye on.
Okay, so that's one potential curveball. Now let's talk about China. It seems like both parties agree that China is becoming too dominant economically. But their plans to deal with that are pretty different.
Yeah, it's rare to see both parties agree on anything when it comes to China. But both Harris and Trump want to restrict trade with China, which at first glance seems like a good thing for India.
Yeah, I mean, more business for India, right? But I remember those tariffs that Trump put in place during his first term, the ones that started those trade wars. Didn't that cause some major problems around the world?
It definitely shook things up. And Philip Capital is warning that if Trump does that again, it could lead to the creation of new trade blocs, which could put India in a tough spot.
So is this really a case of China loses, India wins?
It's more complicated than that. Some Indian industries might benefit from less competition from China, but others could face new obstacles in those new trade blocs. Philip Capital is still figuring out who the winners and losers might be, but they're saying it's not a sure win for India. It really depends on the details of those tariffs and how they change global supply chains.
Okay, so we've got the economy, we've got taxes, we've got China, and a whole lot of uncertainty. Let's move on to energy and defense, two sectors that are hugely important globally. Where do our candidates stand on those?
On energy, there's a pretty clear divide. The Democrats, with Harris, they're all about green energy. They're pushing for clean energy initiatives. And the Republicans, well, they're sticking with oil and gas. They're promising incentives for drilling, and they might even roll back some of those green energy benefits.
So it's a classic battle between fossil fuels and renewables. But what about defense spending? It seems like both parties are always happy to spend more on that.
Yeah, that's true. Both Harris and Trump want increased defense spending, but their foreign policy priorities are quite different. Harris has been very vocal about supporting Ukraine, while Trump has been more focused on strengthening ties with Israel.
So how does India deal with that? They've always tried to stay neutral in these conflicts.
That's the challenge for India. If the U.S. spends more on defense, it could create opportunities for Indian defense companies to work with U.S. firms, and maybe even participate in arms deals. But India has to be careful not to get caught in the middle of those shifting U.S. alliances.
It's like they're walking a tightrope. They need to stay on good terms with everyone.
And speaking of tricky situations, let's talk about immigration. It's always a hot topic in U.S. elections, and both Harris and Trump seem to be on board with this idea of bringing jobs back to the U.S. with stricter immigration controls and more onshoring.
Right, and that has huge implications for the Indian IT sector,
Mm-hmm.
which has always relied on U.S. visas for a lot of its workforce. Yeah, that was a big concern during Trump's first term. Everyone was worried about those H-1B visa restrictions. Is this going to be a disaster for Indian IT this time around? Or are they finding ways to adapt?
Well, according to Philip Capital's report, those big Indian IT companies, PCS, Infosys, Wipro, and HCL Tech, they haven't just been sitting around worrying. They've been quietly changing their game plan to become less dependent on those U.S. visas.
Really, what are they doing differently?
Well, first, they've been hiring more locals in the U.S., Mexico, and Canada. And we're not talking about a few new hires here. We're talking about a major shift in their workforce.
So they're building up their local talent pools. That's smart. What else are they doing?
They're also getting better at using subcontractors who already have U.S. visas. It's
Yeah.
basically a way to get around the visa issues and keep projects moving forward.
So they're finding creative solutions. Anything else?
And this is where it gets really interesting. They're opening more nearshore delivery centers in Mexico and Canada.
So those are like satellite offices closer to their U.S. clients? What's
Yeah.
the benefit of that?
It's a win-win. First, costs are lower in Mexico and Canada compared to the U.S., so they can offer better prices. And second, they're in similar time zones, which makes it much easier to work with U.S. clients.
So they're saving money and making things more efficient, all while reducing their reliance on those H-1B visas. That's pretty impressive. But is it enough to protect them completely from stricter immigration policies?
That's the big question. Philip Capital's analysts are cautiously optimistic. They're saying that these moves definitely put Indian IT companies in a stronger position than they were a few years ago. But they're also saying that it's a long game, and the long-term impact will depend on a lot of things.
So the IT sector is adapting, but there's still some unknowns. Now let's zoom in on a few other key sectors and see how they might do under a Harris or Trump presidency. Let's start with automobiles.
All right, let's see what's driving this industry. With automobiles, we see a potential mix of opportunities and challenges, especially when it comes to electric vehicles or EVs. Trump's stance on EVs has been, well, let's just say, lukewarm. If he wins, Philip Capital predicts we might see a slowdown in EV adoption in the U.S.
Hold on. I thought EVs were the future. Wouldn't a slowdown be bad news for everyone?
Not necessarily. Here's the thing. A slowdown in EVs could actually boost demand for hybrid vehicles, at least in the short term. And that's good news for companies like Sona BLW. They supply components for both types of powertrains.
So it's kind of like one door closes, another opens. They're playing both sides.
Exactly. They're not putting all their eggs in the EV basket. And there's another potential upside for Indian automakers if Trump goes back to his protectionist ways.
You mean those tariffs again, right?
Hmm.
How would those affect the auto industry?
Well, his America First philosophy could mean higher tariffs on cars imported from other countries, especially from China and Mexico. And that could give Indian manufacturers a chance to step in, especially in the EV market.
Wait, so you're saying that if Trump brings back those tariffs, it might actually give India a chance to become a major EV exporter?
It's definitely a possibility worth considering. India has been making progress in EV manufacturing, and these changes in the global market could really help them grow. Philip Capital is actually pretty optimistic about this scenario. They think it could be a game changer for the Indian auto industry.
Okay, so there's a lot going on in the auto sector. Potential winners and losers,
Yeah.
depending on how things shake out. Let's move on to energy. We talked about those big differences in energy policies, green energy versus oil and gas. What could a Harris or Trump win mean for India's energy landscape?
Well, if Trump wins and goes all in on fossil fuels, it could lead to a big increase in U.S. oil and gas production, which could push global prices down.
And lower energy prices would be good for India, right?
Absolutely. Indian refiners would benefit, and so would consumers. Plus, it could give Indian utilities a chance to secure those long-term gas contracts we were talking about earlier, so they could have more diverse energy sources.
So it's a win-win for Indian consumers and businesses.
In the short term, yes. But Philip Capital is saying we should be careful here. They're saying cheaper fossil fuels might be good for now, but they could also make it harder for India to transition to a more sustainable energy mix.
So it's that classic dilemma, balancing short-term economic benefits with long-term environmental goals. It's a tough one. Okay, let's turn our attention to commodities and metals. We know Trump loves to talk about infrastructure, and his protectionist tendencies could really shake things up in this sector.
They definitely could. If Trump wins and actually follows through on his infrastructure plans, we could see a big jump in demand for metals. Kind of like what happened after he won in 2016. Remember that spike in commodity prices?
Yeah, that was wild. So which Indian companies are best positioned to take advantage of this?
Well, companies like Tata Steel and JSW Steel, they're major steel producers in India. And they could see a big increase in demand if Trump's infrastructure plans get going.
So more steel for bridges, buildings, and maybe even that border wall he's always talking about.
Maybe. And his protectionist policies, which could mean higher tariffs on steel imported from other countries, could make things even better for those Indian steelmakers.
Okay, so Indian steelmakers could be big winners if Trump sticks to his old playbook. Now let's wrap up this sector-by-sector analysis with pharmaceuticals. It's a sector that's always in the spotlight, especially when it comes to drug prices. We talked about how both Harris and Trump want to lower drug costs, which could be tough for Indian companies that make generic drugs. But Philip Capital's report had some interesting things to say about this.
Yeah, it's not as simple as it seems. Philip Capital's report suggests that the amount of pharmaceuticals India exports to the U.S. is likely to stay the same, even if prices go down.
So the same volume, but maybe lower prices. Not ideal, but at least it's not a complete disaster. Why do they think those export volumes will hold steady?
They're saying that even with efforts to control costs, the demand for affordable generics in the U.S. is still really high. Indian companies have a strong presence in this market, and their competitive pricing gives them an advantage, even if their profit margins shrink a little.
So they're hanging in there. But they'll need to watch those pricing pressures closely. Now let's zoom out and look at the bigger picture. Global supply chains are changing. China's role is being questioned. And there's a lot of talk about decoupling. Where does India fit into all of this?
That's the million-dollar question. The U.S. is clearly trying to rely less on China, and that creates a huge opportunity for India. We could see Indian companies doing well in sectors like textiles, auto components, and consumer electronics, as U.S. businesses look for other places to get their products from.
So India could become the new go-to instead of China. Is that what Philip Capital is predicting?
It's possible, but they're also saying it's not a guarantee. India needs to step up its game to really become a viable alternative to China. That means creating a better environment for businesses, improving infrastructure, and showing that it can meet global standards for quality and production.
Okay, so India needs to seize the moment and make the most of this opportunity. Now, before we wrap up, let's take a step back and look at some history. We've been focused on the 2024 election, but how have U.S. elections usually impacted India? Have they generally been good, bad, or somewhere in between?
Well, if we look at the historical data, it's interesting to note that both Democratic and Republican presidents have overseen periods of economic growth and stability in the U.S., and importantly, their victories have generally led to positive outcomes for India.
So no need to panic no matter who wins.
Not exactly. While the overall trend has been positive, we have to be realistic. Each presidency comes with its own challenges and opportunities. The key for India is to be ready for both, adapt to the changing global landscape, and make smart decisions to maximize its potential gains while minimizing potential risks.
Sounds like good advice. Now, I know we have a lot of data to dig into, historical macro and equity performance numbers, and even a closer look at how specific companies have done under different presidents. But before we get lost in all the numbers, I want to make sure we're keeping our eye on the prize. Remember, our goal is to figure out what India can do now to be ready for a post-2024 world, no matter who wins the election.
Absolutely, we can learn from the past, but we can't assume that the future will be exactly the same. We need to analyze those historical trends, identify potential risks and opportunities, and then translate that into actionable insights for India.
So let's start by looking at those historical numbers. We have data on GDP growth, unemployment rates, inflation, currency movements, equity market performance, the whole nine yards. Where do we begin?
Let's start with a broad overview of U.S. economic performance under recent presidents, both Democratic and Republican. We'll look at key indicators like GDP growth, unemployment, and inflation.
Okay, sounds good. Let's fire up those spreadsheets and see what the numbers tell us.
Right, let's go back in time a bit, starting with the George W. Bush era, a Republican presidency that lasted from 2001 to 2009. Remember, he faced some major challenges right away. The dot-com bubble burst and then the 9/11 attacks.
Yeah, talk about a trial by fire. So how did the U.S. economy actually do under his leadership, given those tough circumstances?
Well, despite those early challenges, the U.S. economy showed some resilience. We saw periods of healthy growth, particularly in the mid-2000s.
So it wasn't all doom and gloom.
Not at all. For example, GDP growth picked up in early 2003 and averaged a respectable 3.7% in 2004 and 2005.
Not bad. But then, of course, came the Great Recession in 2008. That must have really thrown a wrench in everything.
It did. The housing market collapse and the financial crisis that followed really hit the U.S. economy hard. In the last few years of Bush's presidency, by the end of his term, the unemployment rate had jumped to 7.3%, a big difference from the relatively low rates the U.S. had enjoyed for most of his presidency.
Ouch, those are some tough numbers. So the economy was basically on life support when Obama took over.
Pretty much. Obama, a Democrat, inherited a very difficult situation. His main job was to pull the U.S. out of that recession and get the economy back on track.
Did he succeed? What did the economic picture look like during his two terms?
Overall, the U.S. saw modest but steady growth under Obama. Average quarterly GDP growth was around 2.3%. It wasn't spectacular, but it was a period of recovery and stabilization.
So a slow and steady approach.
Exactly. And in terms of jobs, things gradually got better. The unemployment rate went down from its peak of 10% in October 2009 to a more manageable 4.7% by the end of his presidency.
Okay, so progress, but not without its challenges.
Yeah.
What about inflation during Obama's presidency? Wasn't that a big worry for voters?
Well, inflation did go up a bit at times during his presidency, but it stayed below 4% for the most part. This relatively low inflation allowed the Federal Reserve to keep interest rates near zero for almost all of his time in office, which was a big part of their plan to stimulate economic growth.
Interesting. So low interest rates to encourage spending and investment. That sounds familiar. Now let's fast forward to the Trump era. Another Republican president with a very different approach to the economy.
Definitely. Trump came in focused on deregulation, tax cuts, and a more protectionist trade policy. And under his leadership, quarterly GDP growth averaged around 2.6%, a little higher than Obama's average.
So did Trump's policies actually deliver that economic boom he promised?
Well, the economy did perform pretty well for a while. Unemployment fell to record lows, reaching 3.5% in February 2020. But then, of course, the COVID-19 pandemic hit, and everything changed.
Yeah, the pandemic was a game changer for everyone. How did the U.S. economy handle that?
The pandemic triggered a sharp recession, sending the unemployment rate up to a shocking 15% in April 2020. It was a brutal shock. But the economy did recover pretty quickly. The unemployment rate dropped to 6.7% by the end of Trump's term.
Okay, so a roller coaster ride of economic highs and lows during Trump's presidency. What about inflation? Wasn't that starting to go up toward the end of his term?
Yes, inflation did become more of a concern in 2018, which led the Federal Reserve to start raising interest rates. But those rates were lowered again as inflation cooled down. Then, as you mentioned, the pandemic hit, and both inflation and interest rates plummeted.
It was a crazy time. Okay, bringing us to the present. Biden's presidency and the aftermath of the pandemic. What does the economic picture look like under his leadership?
Biden, a Democrat, took office facing the ongoing challenges of the pandemic and its effects on the economy. During his first few years, the U.S. economy experienced a decent recovery. Average quarterly GDP growth came in at 2.4%, similar to what we saw under Obama.
So a continuation of that slow and steady growth trend.
Yeah, but with some new twists, especially when it comes to inflation. Remember that huge spike in inflation in 2022? It reached a whopping 9.1% in June.
Ouch, that must have hurt. What caused that sudden surge?
It was a perfect storm of factors. Pent-up consumer demand after the pandemic lockdowns, supply chain disruptions, and then the Russia-Ukraine war, which sent energy and commodity prices through the roof.
It was like a global economic hangover, with a war thrown in for good measure. No wonder inflation went crazy. How did the Biden administration and the Federal Reserve respond to that?
The Fed went into inflation-fighting mode. They aggressively raised interest rates to cool down the economy and bring inflation under control. They kept those rates high for over a year before making their first rate cut in September 2024.
So is inflation finally starting to behave itself?
It seems to be easing, but it's still above the Fed's target rate, so it's still too early to say whether they've successfully tamed inflation.
Okay, so the inflation saga continues. Now let's zoom out a bit from the U.S. and look at the currency markets. How has the U.S. dollar performed under these different presidents? And what does that mean for India?
The U.S. dollar, or DXY as it's often called, has had its ups and downs, just like the economy itself. During Bush's presidency, it generally depreciated, meaning it lost value compared to other major currencies.
And how did that impact the Indian rupee?
Well, a weaker dollar usually means a stronger rupee, which can be good for India's import bill, but it can also make Indian exports less competitive. It's a trade-off.
Right, there are always two sides to that coin. What about during Obama's presidency?
Under Obama, the dollar appreciated. It gained value against other currencies. This was partly because of the global financial crisis, as investors looked for the safety of the U.S. dollar. But it also reflected the gradual recovery of the U.S. economy.
And how did that stronger dollar affect India?
A stronger dollar usually puts downward pressure on the rupee, making imports more expensive for India, but potentially boosting its exports. During Obama's presidency, the rupee depreciated significantly, falling by almost 39%. Of course, that wasn't all because of the stronger dollar. Domestic factors also played a role.
So again, a mixed bag for India, depending on which sector you're looking at. What about during Trump's presidency? Didn't his America First policies have a big impact on the dollar?
They did. His protectionist trade policies and his focus on boosting U.S. manufacturing initially put upward pressure on the dollar. However, by the end of his term, the dollar had actually weakened slightly.
Interesting. So did that give the rupee a bit of a break?
Yes, the rupee held its value relatively well during Trump's presidency, depreciating by only about 5%. And during Biden's presidency, we've seen the dollar strengthen again, partly because of the Fed's aggressive interest rate hikes. This has put downward pressure on the rupee, though not as much as during Obama's term. It's currently down about 15%.
Okay, so currencies are always changing, responding to global events and economic policies. Now let's talk about something that really gets investors excited: equity markets. How have U.S. and Indian stock markets performed under these different presidents?
Well, if we adjust for those recession-induced dips, U.S. equity indices like the S&P 500, NASDAQ, and Dow Jones have shown growth across all these presidencies.
So no matter who's in the White House, stocks tend to go up in the long run.
That's been the historical trend, yes. But of course, there are variations in the pace and magnitude of those gains. For instance, during Bush's presidency, the S&P 500 rose by 13%, the NASDAQ by 3%, and the Dow Jones by a more impressive 28%.
Okay, some decent returns there, especially considering all the market turmoil during that time. What about during Obama's presidency?
Under Obama, we saw some really great gains. The S&P 500 surged by 89%, the NASDAQ by a whopping 119%, and the Dow Jones by 78%.
Hold on, did I hear that right? The NASDAQ more than doubled during Obama's presidency. That's amazing, especially since he took office during a financial crisis.
It was a remarkable period of growth for the U.S. stock market, and that momentum continued to some extent during Trump's presidency.
Did Trump manage to keep that bull market going?
He did, at least for a while. During Trump's presidency, the S&P 500 rose by 65%, the NASDAQ by an even more impressive 130%, and the Dow Jones by 54%.
So despite all the political drama and those trade wars, stocks kept going up. It seems like nothing could stop that bull market.
Well, the pandemic definitely threw a wrench into things, but the market did recover surprisingly quickly. And under Biden, we've seen further gains. They're not quite as dramatic as those under Obama and Trump. The S&P 500 is up 55%, the NASDAQ 39%, and the Dow Jones 41%.
Okay, so across the board, U.S. equity markets have generally trended upwards, no matter which party was in power. What about the Indian stock market? How has it reacted to these different U.S. presidencies?
The Indian market, represented by the Nifty Y index, has also shown resilience and growth across these presidencies. During Bush's term, it actually tripled in value, driven largely by domestic factors. Under Obama, it grew by 55%, under Trump by 63%, and under Biden, it's already up by an impressive 89%.
Wow, those are some serious returns for Indian investors. It seems like both U.S. and Indian markets have a way of weathering those political storms and delivering long-term gains.
That's right. But remember, past performance is not necessarily indicative of future results. There are always risks and uncertainties in the market, and political events can definitely play a role.
Absolutely. Now let's dig a little deeper into the performance of specific companies, because that's where things get really interesting, especially for investors.
Let's start by looking at earnings per share, or EPS. It's a key measure of a company's profitability. And again, we'll compare how U.S. and Indian companies have performed under these different presidents.
All right, let's see who's been making the most money.
If we look at the compound annual growth rate, or AGAGR, of EPS, which gives us a sense of the average growth rate over time, we see some interesting trends. For U.S. companies in the S&P 500, NASDAQ, and Dow Jones, the highest EPS growth actually occurred during Biden's era, with a CAGR of 78%, 82%, and 64% respectively. That's pretty impressive considering the economic headwinds he's faced.
So despite all the challenges, U.S. companies have been really profitable under Biden. What about the Trump presidency? How does that compare?
During Trump's presidency, we saw lower but still respectable EPS growth for those same indices. The S&P 500 had a CAGR of 52%, the NASDAQ 37%, and the Dow Jones 25%.
Okay, so solid growth, but not quite as strong as during Biden's term. Now, what about Indian companies? How does their EPS growth stack up against their U.S. counterparts?
Interestingly, the Indian NEUY index saw its strongest EPS growth during Obama's time in office, with a KGR of 77%. That was followed by 56% growth during Trump's presidency, and a robust 83% growth with Biden at the helm.
So Indian companies have been holding their own, even outperforming U.S. companies in some cases. It's great to see that kind of growth.
It is impressive, but remember, earnings growth is only part of the story. We also need to look at valuations, which tell us how expensive or cheap a company's stock is relative to its earnings.
Valuations are key for investors. No one wants to overpay for a stock,
Yeah.
no matter how good the earnings look. So how have valuations trended for U.S. and Indian companies during these different presidencies?
For U.S. companies, as measured by the price-to-earnings ratio, or PE ratio, valuations corrected during Obama's time in office, meaning they became less expensive. This was likely due to the market uncertainty following the financial crisis.
So it could have been a good time to buy U.S. stocks, if you were feeling brave.
Possibly, yes, and then under Trump, valuations shot up, especially for the S&P 500 and NASDAQ.
So stocks got more expensive during Trump's presidency. Was that justified by the strong earnings growth we saw, or was it more about market sentiment?
That's the big question, isn't it? Are valuations driven by fundamentals or by hype? Interestingly, the Dow Jones saw more stable PE ratios during Biden's presidency, while the S&P 500 and NASDAQ valuations have continued to climb.
So U.S. stock valuations have been a bit of a mixed bag, depending on the index and the presidential term. What about Indian companies? How have their valuations fared?
Indian stock valuations, as measured by the Nifty-wise PE ratio, have been trending upward over the years, reflecting the strong economic growth and earnings performance we've seen in India.
So Indian stocks are getting pricier.
Yes, but that doesn't necessarily mean they're overvalued. The average Nifty-Y PE ratio was around 15x during the Bush era, 16x during Obama's time, 21x during Trump's term, and it's now at 22x during Biden's presidency.
Okay, so Indian stocks are definitely not cheap, but their valuations seem to be supported by strong fundamentals. Now, before we wrap up this deep dive into historical market performance, let's circle back to those sectors we discussed earlier. Remember, we're trying to figure out which companies might benefit or be negatively impacted by the outcome of this election.
Right. Let's connect those historical trends to the potential scenarios we outlined for a Harris or Trump victory and see if we can identify some specific companies that might be worth watching closely.
Okay, sounds good. Let's start with the IT sector, which, as we discussed, could face some headwinds if Trump wins because of his stance on immigration. But we also talked about how Indian IT companies have been adapting and diversifying their operations.
Right. They've been proactively making moves to become less reliant on those U.S. visas, and Phillip Capital has highlighted some specific companies that are leading the way in this adaptation.
Okay, I'm listening. Which companies are they talking about?
Well, TCS, Infosys, Wipro, and HCL Tech have all been aggressively hiring locals in their key markets and expanding their presence outside the U.S. They've also been increasingly relying on subcontractors who already have U.S. visas, so they don't have to send as many employees from India.
Right. They're getting creative with their workforce strategies. But what about specific numbers? Do you have any data points that really highlight this shift?
Absolutely. Let's take a look at TCS, for instance. They now have a whopping 63,000 employees across the U.S., Mexico, and Canada. Out of those, only 45,000 are in the U.S., while 12,500 are in Mexico and 5,500 in Canada. That's a significant presence outside the U.S.
Wow, those are some impressive numbers. And what about Infosys? Are they following a similar strategy?
Yes, they are. Infosys has 30,938 employees in the U.S., 500 in Mexico, and 8,000 in Canada, for a total of 39,438 across those three countries. Again, we see a substantial workforce outside the U.S.
So both TCS and Infosys are clearly diversifying their geographical footprint. What about Wipro and HCL Tech? Are they keeping pace?
Wipro has a slightly different approach. With a larger presence in Mexico than in Canada, they have 16,000 employees in the U.S. and a massive 20,500 in Mexico. While their Canadian presence is not publicly available, HCL Tech, on the other hand, has a smaller overall workforce in these markets, with 23,000 in the U.S., 2,400 in Mexico, and 2,600 in Canada, totaling 28,000.
Okay, so it seems like all the major Indian IT players are making strategic moves. To mitigate the risks associated with tighter U.S. immigration policies, they're not just sitting around waiting to see what happens, they're taking action.
Exactly, they're adapting and evolving.
Now let's shift gears to the auto sector. We talked about how Trump's stance on EVs could create both challenges and opportunities for Indian suppliers.
Yeah.
Which companies are most likely to be affected? Well, we talked about Sona BLW earlier. They have a lot riding on the EV market, so a slowdown in EV adoption in the U.S. could potentially hurt them.
That's right. They have a large exposure to the EV market, with about 80% of their order book coming from EV components. But as we discussed, they also supply components for hybrid vehicles, which could help them if the EV market slows down.
So they're not putting all their eggs in one basket.
Exactly. And they've been very vocal about highlighting their hybrid capabilities. They're making sure everyone knows they can supply components for both electric and hybrid powertrains. This diversification could be a key advantage for them in this uncertain environment.
So they're adaptable. What about other Indian auto component suppliers? Are there any others that are particularly vulnerable or well-positioned in this evolving landscape?
Samel is another company to watch. They also have a significant presence in the EV supply chain, so they could face similar challenges if EV demand softens in the U.S. However, they're also diversifying their product portfolio and exploring opportunities in other segments, just like Sona BLW.
Okay, so both Sona BLW and Samel are companies to keep an eye on. Now let's move on to the energy sector. We talked about how a Trump victory could lead to increased U.S. oil and gas production, which could be good news for Indian refiners and consumers. But which specific companies might benefit most from this potential shift?
Well, India's major oil refining companies, like Reliance Industries and Indian Oil Corporation, could see their profit margins improve if crude oil prices fall as a result of increased U.S. production.
Lower input costs, always a good thing for the bottom line. What about natural gas? We talked about the potential for long-term gas contracts. Which companies might be involved in those deals?
Indian gas utilities like JL India Limited and Petronet LNG Limited could be in a good position to secure favorable long-term gas contracts from U.S. suppliers if Trump pushes for increased production.
Okay, so those are some companies to watch in the energy space. Now let's talk about those commodities and metals companies. That could potentially benefit from Trump's infrastructure plans and protectionist policies. Any specific names that jump out?
Well, we already mentioned Tata Steel and JSW Steel. They're both major steel producers in India, and they could see a surge in demand if Trump follows through on his infrastructure promises.
More steel for bridges, buildings, maybe even that border wall he's always talking about.
Potentially, yes. And his protectionist policies, which could lead to higher tariffs on imported steel, could create an even more favorable environment for these domestic producers.
So a potential double win for Indian steelmakers if Trump's policies align with their business. Now let's wrap up this sector-by-sector analysis with pharmaceuticals, a sector that's always under scrutiny, especially when it comes to drug prices. We talked about how both Harris and Trump have pledged to lower drug costs, which could pose challenges for Indian generics manufacturers. Are there any specific companies that are particularly exposed to this trend?
Well, companies like Dr. Reddy's Laboratories, Cipla, and Aurobindo Pharma all have a significant presence in the U.S. generics market, so they're likely to feel the pressure if those prices continue to decline.
So they're facing some headwinds. Are there any bright spots or potential growth areas for Indian pharma in the U.S. market, despite those challenges?
Yes, despite the pricing pressure in generics, there are still opportunities for Indian pharma companies to innovate and develop new specialty drugs or biosimilars. These higher value products could offer better margins and less price sensitivity.
So it's all about moving up the value chain and focusing on innovation.
Exactly. That's the key to staying competitive in any market, especially one as dynamic and complex as the U.S. pharmaceutical market.
Okay, so we've covered a lot of ground here, from the Electoral College to the intricacies of the U.S. dollar and the historical performance of various sectors. What are some of the most surprising or impactful takeaways for our listeners? What should they be thinking about as we head into the final stretch of this election?
Well, I think the biggest takeaway is that the U.S. election outcome will have ripple effects across the globe. And India will definitely feel those ripples. We've seen how different sectors, IT, automobiles, energy, commodities, and pharmaceuticals, could be impacted in various ways depending on who
It's
wins.
like a giant game of economic chess, with each move having cascading consequences.
Exactly. And it's really important for businesses and investors to understand these potential consequences and make informed decisions.
Right. No one wants to be caught off guard when things change. Now let's play a little what-if game with our listeners. Imagine Harris wins. What are some of the potential implications for India?
Well, under a Harris presidency, we might see a continuation of many of the Biden administration's policies, a focus on clean energy, efforts to contain China's economic influence,
Right.
and potentially a more open approach to immigration, which could benefit the Indian IT sector.
Okay, so a somewhat predictable path. Building on existing trends, now let's flip the script. What if Trump wins again? What might that look like for India?
A Trump win could bring more volatility and uncertainty to the global landscape. We might see a return to his America First agenda, with protectionist trade policies, a renewed emphasis on fossil fuels, and potentially a tougher stance on immigration, which could pose challenges for some Indian companies.
So a bit more of a wild card scenario, with the potential for both disruption and opportunity.
Yeah.
It's interesting to think about all the possibilities. What stands out to you most from all this research? Has it changed your perspective on this election?
What's really striking is that regardless of who wins, India will face both opportunities and challenges. A Harris victory might offer more stability and predictability, while a Trump victory could bring more volatility and potential disruption to existing trade relationships. The key takeaway for me is that India needs to be prepared for either scenario and maintain a flexible and adaptable approach to its economic and foreign policies.
That's such an important point. Flexibility and adaptability. It's not about picking sides or predicting the outcome. It's about being ready to handle whatever the future holds. Now, for our listeners who are still thinking about the potential impact of this election, here's a final thought-provoking question to consider.
I'm ready. Hit me with it.
Given all the uncertainties we've talked about and the potential for big changes in the global landscape, what strategic decisions should India be making right now to set itself up for success, no matter who wins the U.S. election?
That's a tough one. It's something that Indian policymakers, business leaders, and investors all need to be thinking about. We're not talking about hypotheticals here. We're talking about real decisions that need to be made today to shape India's future.
So what are some of those decisions? Where should India be focusing its energy and resources?
Well, there's no single answer. But based on all the research we've looked at, I think a few key areas stand out. First, India needs to really focus on strengthening its own industries. That means encouraging innovation, supporting entrepreneurs, and creating a regulatory environment that helps businesses grow and thrive.
So building a stronger foundation at home makes sense. But what about India's role in the world?
That's the second piece. India needs to be more proactive about diversifying its trade partnerships. It can't just rely on a few key markets. It needs to build stronger relationships with countries all over the world.
So spreading the risk.
Exactly, and that brings us to the third key area, infrastructure. India needs to invest a lot in modernizing its infrastructure, transportation, logistics, energy, digital connectivity, everything.
So making it easier to do business in India.
Yeah.
And making India a more attractive place for foreign investment.
That's the goal. And finally, India needs to keep pushing for progress in technology and fostering a culture of innovation. That means investing in research and development, supporting STEM education, and creating an environment where new ideas can take off.
So those are the four pillars of India's strategic roadmap: strengthening domestic industries, diversifying trade partnerships, upgrading infrastructure, and driving innovation. It sounds like a lot.
It is ambitious, but it's also essential if India wants to succeed in this rapidly changing world. Remember, the U.S. election is just one piece of the puzzle. There are global economic trends, geopolitical shifts, technological advancements, all sorts of factors that will shape India's future.
So it's not just about reacting to what happens in the U.S., it's about actively shaping India's own destiny.
Exactly. India can't just sit back and watch. It needs to be bold, strategic, and forward-thinking to reach its full potential.
Well said. And on that note, I think it's time to wrap up this deep dive. We've explored a lot of complex issues, analyzed a ton of data, and hopefully given our listeners some valuable insights that will navigate this uncertain world.
I hope so. And remember, the future isn't something that just happens to us. It's something we create through our choices and actions.
That's a great point. Thanks for joining me on this deep dive into the potential impact of the U.S. election on India. It's been a fascinating journey.
It's been my pleasure. It's always interesting to explore these global connections. and think about how things might unfold.
And to our listeners, thanks for tuning in and engaging with us on this important topic. We hope you found it informative and thought-provoking, and maybe even a little bit inspiring. Until next time, keep exploring, keep learning, and keep those deep dives going.